We will talk about the challenges and the opportunities. At this time, I'd like to welcome up my friend and advisor of mine, Lloyd Lobo. Lloyd is the co-founder of Boast.ai, a FinTech startup, as well as the founder of Unbank.Conference. Without further ado, I'd like to bring up Lloyd and the rest of the panel.
Hopefully, this panel will address raising hundreds of millions in capital. They've invested in a lot of awesome companies. So before we get started with the panel, well, I'll just have each of them introduce themselves, because I don't want to do that, and also provide their definition of what's FinTech in terms of their investment thesis.
Good morning, my name is David Mort, an investor at Propel Venture Partners, an early stage venture capital fund based in San Francisco. Relevant to financial services is how we label it, I think in the US, like core FinTech, payments, lending, wealth management. But then you have a host of things in the periphery that are useful for companies in general. Identity, travel, sort of payments and rewards networks, those type of things on the periphery that are also interesting to us. And we've invested in those areas.
Good morning. My name is Jay Onda from Mort in Silicon Valley. I work with the startup financing side and working with Moses, who spoke earlier this morning, looking at FinTech in particular. And for us, FinTech is anything that touches money, right? And so Orange, as you know, has been in the mobile payment side, mobile banking side. And so we're looking at investing and working with startups and growing out that ecosystem.
Hi, everyone. My name is Alex Davidov. I'm an investor with Core Innovation Capital, also an early-stage fintech-focused fund. The way we think about the world is we're looking for companies that create value for everyday Americans. So that's consumers and small businesses. We do that because we believe that that's how you build the biggest lasting businesses. And that could be by offering a better consumer product or saving costs, or it could be by changing something at the infrastructure level and fundamentally shifting something in financial services that accrue, where the benefits accrue to a wide swath of the population. Seed and Series A, so that incorporates everything from infrastructure to credit to all sorts of SaaS products to things in the future of work and in health tech as well.
So Alex, we'll start with you. What FinTech innovation are you most excited about right now, and why?
I think that's a great question. So I think my answer is going to be a little bit boring, and I think because it's not really like a common innovation, or it's not like current innovation, but I think like microservices and APIs and cloud, like that whole shift that has affected the rest of the world maybe a few years ago is finally coming to FinTech. I think we're seeing startups built around that space, and I think we're also seeing incumbents adopt that technology, sort of a few years behind some other industries, and I think that opens the door to all sorts of new innovations and all sorts of products and businesses to be built faster than ever before. So, I think people might say AI or blockchain. I think those are incredible innovations that are going to drive a lot of new products, new interesting features. But I actually think just the very fundamental shift to like APIs and cloud are going to drive more improvement in consumer services than many of the other cutting-edge technologies.
Any in your portfolio that are particularly exciting, recent ones, maybe?
Within that theme?
Yeah.
TBD. But aside from a few that are TBD, I mean, I think the stuff at the sort of infrastructure level that we are really excited about is Ripple, which is really changing the entire sort of ledger backend for a number of large financial institutions and corporations. And that's the sort of thing that I think enables faster settlement, faster money movement, cheaper money movement. And I think there's going to be a lot of different innovations in that sphere that are going to, they're otherwise fundamentally not necessarily it's not all blockchain, it's not all crypto, but even just moving people to a common ledger and a common standard is going to have a huge impact.
Awesome. Jay, same question.
I'll be boring and say AI and blockchain, but what it really means is that the technology existed, And in most recent times, we're actually seeing the actual practicality, the business applications of it, right? And I think that's really exciting. So everybody was talking about the hype, saying, yeah, this is going to be fantastic. And we're like, okay, well, that's great, but where's the business? Where's the business model? And we're slowly seeing startups, early stage startups in particular, uncover that in various markets. And so we have presence in Africa, for example, and actually in Europe. And over there isn't a credit bureau, for example. So how do we create a credit score, right? And how do we build credit history if there isn't a credit bureau to report to? So I think there's applications of machine learning algorithms, taking data from telcos and banks, and really creative ways. And then if you tie that with blockchain, I think you get a really interesting insight that won't be fudged by bias, right? And so I think there's a lot of interesting use cases that are popping up. And then aside from that, I think the ICO market is really exciting. Everybody's kind of paying attention, and I'm really excited to see how that plays out.
Awesome. David, go for it.
I hope it's not too cliche to say that maybe not blockchain, but at least what we're seeing with decentralized business models is the most interesting trend that at least I've seen in the last decade here during my time in Silicon Valley. Fortunate to have invested in companies like Coinbase, but also Brave and Civic, who have done ICOs separately. I don't pretend to have all the answers as to where these businesses are going or what it means for venture capitalists, but I think it's caught our imagination, at least at Propel, and we're spending a lot of time thinking about how do we react or operate in this new landscape. So,
Awesome. So we'll take the next question with you. What do you look for before you invest in a fintech company?
So obviously it changes over time, but if I look towards the last few investments that we've made over, say, the course of the last 2 years, really spending a lot of time with B2B to either E, with E being the employer or the employee, like businesses that are not just building direct consumer channels. Obviously, banks have a difficulty in acquiring customers, and I think in the early wave of FinTech, a lot of companies were doing a great job, and still are doing a great job at acquiring customers effectively. That said, this will become more competitive over time. A lot of businesses have a heavy reliance on, say, Facebook for user acquisition. And so we're looking for other very large and open distribution channels from the incumbents that are serving, say, SMBs or different type of employees. Think about payroll providers, software providers like Intuit and others that we can use those channels to acquire customers through and at hopefully a healthier clip.
In general, we're looking for strategic companies, right? And this applies to most all corporate venture and innovation groups is, where on that spectrum are you, right? Is it short-term, near-term strategic, longer-term strategic and understanding how the market grows, or is it financial return? And so we're always juggling between those three concepts and trying to figure out who do we want to best work with for what reason. And we have to have a strategy and reason why, right? So there's been fantastic companies. I've been a fan of Coinbase since the early days. And, it just seems to make sense. But at that time at the Series A raise, pitching it just didn't make sense. It was just too ambiguous. It was too risky. It was associated to the dark web and porn and drugs and all those things. And I'm like, no, guys. Like that's just what the media's take on it, just to scare you. But it takes a long time to get that commercial traction, the education piece. And then now that it's kind of more mature, we have to look at it and think, how is this going to be of strategic value in the future? How do we have to position ourselves to welcome this type of innovation and technology? And so as that thought process grows and more matures, we have a refined process. So for the startup side, we, depending on the opportunity, we'll do an early stage deal. If it's, again, more strategic, then it's more a mature company because they have to be able to scale with us. And so there's a risk and reward balance that we have to look at.
Yeah, so under the headline of companies that create value for everyday people, I think you can sort of split up entrepreneurs and sometimes either as mercenaries or as missionaries, people who just want to help the world, save the world, and then folks who just want to make money. And we're looking really at the intersection of those two. We call them visionaries, but I think that's sort of folks who understand that the blend of the two is really what makes a lasting business something that's worth creating. So I think that's sort of the overarching thesis. It's the overarching thing we look for. Like drilling down a level and for businesses. And I would second with some of the things that have been said before, but I think distribution is probably the key thing that we will get hung up on, just because incumbents often have such a massive advantage in distribution in financial services. So overcoming that, whether that's B2B2C, whether that's just a SaaS product, whether that's some clever hook for a consumer business, is absolutely critical for us to see.
Awesome. We'll take the next question with you. So FinTech seems very difficult or rather expensive to get off the ground. What are your recommendations for people who are just getting started?
Yeah, absolutely. So first off, I think it's important to note this is not a move fast and break things environment. So make sure you check all the boxes regarding regulatory risk. Make sure you have your compliance in order, because this is not, this isn't fighting the taxi cab lobby. This is much more serious, and you will get shut down. You'll get fined. So that it's worth spending more time getting those things right early in the company's life versus having to pay for it later. In terms of getting up to speed quickly, I think there's a ton of products and services that you can build on today. So shout out to Sankeet at Synapse, API for doing all sorts of different types of financial transactions, from moving money around to opening bank accounts, KYC. And so if you're building a FinTech app today, you should be heavily leveraging products like that, because they get you up to speed very, very quickly and allow you to iterate on sort of the core features of your product. So between things like that and Plaid, I think there's a lot to build on. I think you can move a lot more quickly today than you could even just 3 or 4 years ago.
Awesome. So you said you do seed investing as well. So if an entrepreneur comes to you with like super early seed stage, what do you look for at the seed stage then, given it's expensive to get off the ground, it takes longer, like you said?
I mean, I think it comes back to the team and the founding team, and having conviction in that group of entrepreneurs building something special, and then within that, having an independent point of view on how the space will evolve, and some sort of advantage within that team. That could be, credibility with regulators. It could be credibility with senior talent. But I think those are the combinations that we're looking for. We're not necessarily looking for. But at the same time, being pre-product in FinTech, I think, is very hard.
Right. Jay, same question. What are your recommendations to help companies get off the ground easier in FinTech?
It's really, at the early stage, it is about the team. Right? It's about the team and the vision, and how well prepared they are to go against regulatory rules and the larger incumbents. And so, a lot of times, or a generation ago, it was all about disruption. Right? Now it's all about collaboration. And so if you could be a value add in the value chain of a big bank and provide services that they can't, not a feature, but a full-on service to make it more efficient, optimize, get better insights and information, et cetera, I think there's a lot of value there, right? Because with the technologists, they're doing deep core tech that the bankers can't do. And so you're providing, engineering talent, skills, looking at the future, and building a business around it to help excel and access new customers or new insights. I think that adds a lot of value, and you're providing value to the banks on things that they can't do. And so if you have a startup that's targeting that, I think that's great, because banks are looking at innovation, they're actively looking at disruptive models, and a small contender comes around, it's irrelevant until it isn't, right? And so they're paying attention. Even if you think they don't know about you, they do. Right? They have an innovation group, they're paying attention to you. So if you're going to be friends, make sure you're friends and work with them. If you're going to be enemies, at least be frenemies so you guys are moving forward together.
Definitely. Same thing, David, on...
So for those familiar with the first neobank, or one of the first neobanks in Simple, launched or founded in 2011, I believe. If you talk to the co-founders, they say it took 2.5 years to get to market. They were still sitting on top of a bank, just like everyone else is today in the neobank space, but had to build a lot of the infrastructure to interact with that bank, a lot of the compliance mechanisms, so that they did not get locked up, to Alex's point. So these are really important things to pay attention to. Shamir and Josh would tell you that they could do what they did in 2011 in 6 months, not 2.5 years anymore. So we're really looking for entrepreneurs who are putting the tech back in FinTech, who maybe are getting to that 6-month point through connections to companies like Synapse Pay and others, and then building for, say, the next 2 years. What's the really hard technical problem they're solving? Where is the technology that they're building as opposed to just a customer acquisition engine, which, again, I think is part of an earlier wave of financial services.
Awesome. So I'm going to take my last question, and then we'll give it to the audience. And you can feel free to ask a question, or if you want to pitch the investors, feel free to do that as well. But what are your top predictions for FinTech in 2018?
Well, in 2017, I told myself I was going to spend more time looking at the real estate space. I still look around us in urban centers and see all of the inefficiencies and transparency that you could bring into the system. It's something I haven't gotten to, and so I can't speak intelligently on. But I think we're going to see more with decentralized business models and also VCs in FinTech changing the way that they're thinking about funding in this ecosystem and their ways to be involved.
I think banks are going to become a lot more aggressive in the innovation space, either by acquisition or doing it themselves. And so I think it's not going to be in the early half of 2018, but maybe in the later half. There's a lot of companies that are worth acquiring, both on the FinTech side, insurance tech. They're all booming, right? They're all creating multi-billion-dollar valuations as an aggregate. And so the banks are aware, and they need to catch up, and they also need to focus on the millennials. And they're looking at new banking models, as we heard earlier. And so to do that, it's easier to buy than build.
Totally agree. I think we're going to see a lot more collaboration with banks rather than competition. I think there's going to be a reckoning in the ICO world, either driven by regulatory action or just because it'll be time for some of these companies to implode that had no sustainable business model, and we'll see how that shakes out. I'm a believer in Bitcoin and a lot of the crypto projects, but I think there needs to be a little bit of a grounding effect there. And then I think to the extent that we're, depending on where we are in the business cycle, to the extent we see delinquencies tick up, continue to tick up, I think there may be increasing opportunities and increasing focus on the debt collection side of the whole sort of value chain or the life cycle of debt.
Awesome. None of you guys predicted Amazon might start accepting Bitcoin. Do you think that's going to happen?
I would imagine they have plenty of people already working on it. And I would expect maybe not accepting Bitcoin. And one of our theses for investing in Coinbase in 2013 or 2014 was around the merchant acceptance piece. It was really a three-pronged business: the exchange, merchant acceptance, and APIs. Two of those three are basically not in existence today, one of them being that merchant acceptance. So I wouldn't anticipate it's immediate, but I'm sure they're working on it.
Awesome.
I will say that I think Amazon's going to roll out a whole bunch of financial products next year that should make a lot of startups and incumbents really worried.
Apparently, they're gearing for a big announcement on crypto at their conference coming up. So I was just curious, what do you guys heard?
They did register a bunch of Bitcoin and related domain names, right? And so there's something coming.
Awesome. So questions, pitches? Go for it. Yeah.
Right on. Good luck.
Thank you.
Go for it.
So I would say I was early in talking to many companies in the ecosystem who now no longer need any venture funding whatsoever. They are all wildly profitable. Maybe not all of them, but they've had a really good run this year. Even companies that were more consulting as opposed to software businesses are doing incredibly well and can fund the transition to software. Hopefully, we are interested in equity investments with a strong research focus internally right now on how we participate in other parts of the ecosystem.
I think the rules are the same. You have to build a great business, and we're going to evaluate a blockchain business the same way that we would evaluate any fundamental business.
Yeah, and we're still an equity-based investing mechanism, so we won't do ICOs or participate in token sales. At least not yet, but we would like to, I think.
I think VCs have to be prepared over the next year as more of their companies that they're already invested in as an early wave move towards these ICOs. So as Brave and as Civic, and ensuring that the dozens of portfolio companies from Silicon Valley investors are aligned with their investors. Whatever their North Star is, if it's the token value or equity value, I think just aligning interests is some conversation that's going to happen in Silicon Valley over the next 18 months.
Any more questions? Yeah, go for it.
So selfishly, the companies that are going straight to ICO, or even some maybe early venture round, call it 5, 10 million, have intentions of raising 80 million in an ICO over the next 6 months. And it's maybe not the same relationship building process that we're accustomed to as early stage investors. So we're looking for that intersection where companies need help with a fundraising strategy, with a marketing strategy, customer acquisition strategy, whatever that may be, whatever we're typically used to or are accustomed to helping entrepreneurs with. If there is that alignment, then we're interested in having conversations.
From kind of a quick guess of where you are, if you show a little bit more traction, you could have a higher valuation of your ICO, right? So why not work on that? And if you're having a hard time pitching VCs, well, is it a blockchain-focused firm or is it kind of a real estate, play? And so you should have 2 pitches, right? And remove the blockchain element, and if that value proposition is strong enough, then it makes sense to invest, right? It's a technology company. It shouldn't be a blockchain company, right? But if you're talking to a blockchain VC, you flip that around. And I think you should try that strategy and see how they bite.
I think from an entrepreneur's perspective, if you can comfortably and legally raise an ICO without diluting your equity, I think that's a pretty good deal for all of you. So, at the risk of talking against my own book, I think it depends what the opportunity is, and what the options are, and you pick your best option. But I think we all feel, at least hopefully, that having helpful investors around the table is always a good thing. But if you can raise $100 million in ICO on a white paper, then why not?
Go for it.
Can you talk a little bit about how you add value to companies in terms of customer acquisition? You mentioned that one of your strengths. I'd like to hear from all of you guys. That's one particular area I'd like to.
Sure. Thank you for the question. Sorry to talk my own book, but we've all worked in the financial services industry. Myself, I've worked at 2 banks. The partners at our firm have worked at card networks and insurance companies, or one of them is a 5-time entrepreneur in the payments and lending and real estate space. And so just through some of the connections that we have or relationships we've developed with former colleagues, business partners in the past, we help companies identify and work through channels. Obviously, the companies have to have a value proposition that resonates for those partners, and even as a strategic or otherwise, that still holds true. So I hope that's helpful.
Good. Customer acquisition. Yeah, I mean, I think in general, FinTech is a very specific space and is a very different network from sort of general enterprise software. So I think like Propel, we spend a lot of time cultivating that network, of both senior talent, potential distributors, potential customers, regulators. So that's the ecosystem that we spend a lot of time growing and getting to know. So there's a number of different ways we can be helpful, whether that's introducing you to a potential customer or introducing you to a potential head of sales. And depending on what you're trying to do. On the consumer side, I think both Propel and all of us have lots of companies in our portfolio who have gone through the work of acquiring a bunch of consumers. And so if you join the portfolio, it's easy to network and chat with the other CEOs and heads of growth who can share their stories of what works and what hasn't.
I guess from a strategic angle, we have access to customers already, right? And so we're very protective because we have 240 million plus customers, and we have to make sure that the quality is there. So we shepherd you in through the organization to get you the right meetings, to make sure that the alignment, the strategy, the whatever it is that you need, right? Co-marketing, branding, whatever. So when we launch together, that you have access and the corporate support. And so it's a little bit different, but and it takes time. Right? And so I've had lots of conversations with early stage startups like, well, can't you just give us access to 10 million customers? I'm like, no, it takes a long time to do that. How long does it take organically to get 10 million customers? We're trying to accelerate that for you, but we have to create a win-win. And so spend that time if you find a good strategic that's really interested, because it'll be worth it if it works out.
Awesome. Let's give it up for this panel.
Thank you.